we're joined at the Pulse by Nobel Prize-winning economist Joseph Stiglitz. He's here in London to present his new book, Free Fall America, Free Markets and the Sinking of the World Economy. Mr. Stiglitz, welcome this morning and happy birthday, I have to say.
Thank you.
Now, let's start talking about Greece. I know that you've been chatting to the Greek Prime Minister and Finance Minister about what they should be doing. Are you really confident that they can make their own way out of this financial crisis without going to the IMF or getting a bailout from Europe?
I am. I've been very impressed with the comprehensive approach that they've had. Trying to accomplish two or three things. One, restore confidence in the markets. Two, to maintain the strength of their economy, because if their economy goes down, even if they get a vote of confidence in the market in the short run, in the long run, the markets don't like an economy that's in the tubes. Yep. And thirdly, beginning the restructuring of their economy that has long been needed, but unfortunately a task that has been postponed over and over again. So I've been really impressed with how they've conceptualized and begun this very, very ambitious agenda.
Of course, they're under quite severe pressure and under quite a lot of attack from speculators. Do you think that will be their downfall, or should they really stand strong on this?
I think they should stand strong. I mean, obviously, the speculators are trying to push them off track. And this is where you asked the question, will they need a bailout? The issue here is there's clearly no risk of a default, but there may be
You're very confident that Greece would not default?
I'm very confident of that. I think given the kind of attack, there's a real problem. Interest rates go up. That increases deficits because you have to pay more on interest. And that can start a vicious spiral, which undermines confidence. And that's where I think it is very important for Europe to come forward with sort of an act of solidarity. It was one of the flaws in the creation of the euro that you created a monetary system without the underpinning of the fiscal basis that you need. In the United States, we have a single currency. But when one part of the country has a problem, California or Texas, we have a huge fiscal machinery that goes in to help that part of the country and to maintain stability. So we don't have the same kinds of problems. And Europe I view the Euro project as a one that's in the initial stages.
It's a work in progress.
It's a work in progress.
But so what exactly, though? I mean, this is very interesting. What exactly should Europe do? Would you like, tell me how you envisage this.
Well, there are things in the short run and the long run. In the short run, for instance, there are things that Europe can do to allow Greece to move towards balancing its budget and keep its economy going. For instance, loans from the European Investment Bank that will help finance capital expenditures that keep the economy strong. I think an initiative that's been widely discussed is a Euro bond, that Europe will stand behind all the countries, borrow money at the interest rates that represent the collective strength of Europe, but provide funds, particularly in times of need, to one country or another. When Europe was created, they created this idea that I think is very good of solidarity funds to help the new entrants. But there is another kind of solidarity funds that has to be created, and that's solidarity funds for stability, that one part of Europe may have problems, particularly subjected to these kinds of speculative attacks. No real problem of solvency is a problem of short-run liquidity. ECB, the European Central Bank, seems willing to lend money to a private bank that is temporarily in trouble. Why shouldn't there be some way to help a country that has a liquidity problem but is perfectly on track to address the problems?
Reports today are saying that that traders have bet nearly $8 billion against the euro on fears that this crisis could spread across Europe. Do you think that what you're suggesting would help underpin that and stop it being so vulnerable to attack?
Very much so. I mean, basically, what this reminds me so much is the kind of thing that happened in the 97-98 crisis, what was called the Hong Kong double play, where they attacked the currency, they attacked the stock market. They reasoned, if we don't make money on one, we'll make money on the other. If they go to defend the currency, they'll raise interest rates, the stock market will go down. We can't lose. And what happened in that case was Hong Kong government intervened and said, we're going to support the stock market. And basically, they killed the speculators. Europe has to do the same thing here. Come to the support of Greece and Spain and Portugal.
That was a dodgy time in Hong Kong, though. I mean, everybody wasn't 100% sure that would work. It is a risk, isn't it?
A risk in the sense that you're fending off the speculators. You're never sure what's going to happen. But in that sense, almost everything you do in the market is a risk. You go forward and you cut back your budget. Will the market say it's enough? Will they say it's too much? Will they say you've now plunged your economy into a recession? Will they say you've done just the right thing? Your workers may go on strike. All these things are risk. You have to make the best gamble, and that's why I emphasize doing the right thing in all these cases is usually the best thing to do. And for Europe to stand by all of its members is, in my mind, the right thing for Europe to do.